For you, and hopefully you have a PowerPoint for this, but we have a client that you're working with, and you had mentioned to them they were exploring whether they needed to sell their house before they could buy the next house, yeah, a bigger house. And you mentioned to them the option of recasting a loan. And we've never done a client transaction with a recast. We both know what it is, but I would really love it if you would kind of explain that so that people would understand what that option is.
Yeah, I don't have a slide for it, but I was just thinking I can try to explain it
That's totally fine. I
as
just
well
wanted
as
to lay that
possible.
out there. Like we're acting like this is spontaneous,
Yeah.
and then you pull up a PowerPoint, just like, okay, yes, we planned
Your
it.
mind this time.
All right, so yeah, so explain to us what a recast is, how that works.
So recast is basically a recalculation of a mortgage, monthly mortgage payment after a large sum of money were put into principal.
Okay,
That's my definition of that. So basically, just a background on that. So most of the loans have option of paying extra to principal without being penalized, right? So
right,
your payment is 3,000, but you can put extra 1,000 into principal. So this way, what will happen is your payment is not going to change, but you will shorten your term on mortgage. You will pay it off faster. You'll save on interest and all that good stuff,
right,
but the mortgage payment will stay the same.
right.
So, but the recasting is option of lowering your mortgage payment after you put extra money into principal.
Okay,
And it's allowed on conventional financing. FHA does not allow that. But also when you work with lender, you need to double check if that particular lender or servicer will allow that recasting, and also what the terms are, because sometimes they'll say that you have to put at least 20% of the balance into principal in order for them to recast you. For example, if your balance right now is 500,000, they want you to put at least 100,000 for them to do that payment recalculation. Some say it's 10%, so it's gonna vary depending on the servicer, the lender, and how much it costs also could vary, but typically it's inexpensive. So you don't need to do a refinance, right? So if you have that extra 100,000, you just typically the procedure is that you let the lender know, the customer service, that that's what I'm planning on doing. And typically they ask you to put it in writing. It's kind of like an agreement, and they'll tell you, okay, so if you put 100,000, we're going to recast it. You're not gonna shorten your term anymore, right? You're still gonna have that 30 years or 29, whatever you're at right now, years left, but we're gonna lower your payment, and the payment is going to be X, and it's going to cost you this much. And typically it's just a couple of $100 that you have to pay.
Okay.
okay.
Yeah,
Okay, so strategically and tactically, a buyer might use this if they, let's say they live in $1 million house and they want to buy a $2 million house. They can afford and qualify for the $2 million house, but they don't want to carry the mortgage that it would take putting 20% down. They'd like to sell the $1 million house and apply that equity to the loan. So instead of having to sell that house first, they could go ahead and get the $200,000 house, sell the $1 million house, whatever they net from that, then put it into the mortgage and lower that payment down as if they had had that money in the first place to put down on the house and have that.
Exactly. That's how it works, and that's what we're doing with
Yeah.
your client, right? So they basically they don't want to be contingent on selling the home, right? And
Exactly.
they're going to put, but they have a lot of equity in current home, but they don't have this much money to put into the new house. So they're gonna put, let's say, 100,000 or 200,000, and the payment is going to be pretty high. They're not comfortable with this payment, but it's just a temporary solution. So they buy this house with 200 down payment, and once they sell the current home and will net 400,000, they're just gonna throw this 400 into the new house and recalculate the recast that payment and have a much more comfortable monthly payment.
Now, when
I have a
they,
question,
okay,
may I?
it's probably the same question I have, so go.
Okay.
If you know
Do,
it's not.
do they have to qualify, like based on DTI and everything at this big amount? And it's just that they simply don't want that big amount? Okay,
Exactly, yes.
so they cannot do, like their numbers have to work and qualify now, not based on just an agreement that when we sell it, we're gonna do it and then it would qualify. They have to qualify immediately. at the
Exactly, so I have to qualify them carrying both mortgages.
Okay.
The current one plus the new one
Okay.
at whatever it comes with 200,000 down payment.
Okay.
Okay.
Now, we do have non-qualified, non-QM type of mortgages available if person does not qualify carrying for this scenario, carrying two mortgages. There are some programs, not regular conventional, but special investor loans that investors provide, where I won't count payment on existing home
Mhm.
if that home is for sale right now. So you put it for sale, but you're not gonna settle before you buy this new home yet. So we won't count that payment against the client because we know they're gonna sell it soon. But that's a specialty loan. It's not regular Fannie Freddie or regular jumbo traditional loans. It's something separate. But if you're talking about regular loans, yeah, you have to qualify both.
Okay, if they did qualify for that bigger property, let's say they qualified and they were only able to put 10% down, and let's say the interest rate was 6%, but because they're putting 10% down, now it's 6.5%. When they sell the current home and they can put that extra 400,000 to it, can the interest rate drop, or
Like
is they
in the
gonna
recasting?
in the recasting, can they recalculate it like, hey, we put 40% down versus just 10%, or are they keeping that interest rate and
Oh,
they're just
right, like
recasting
for the
it over?
total recast.
No, then they just need to do refinance then it
Okay,
would
so
be
they're not going to change
refinance.
interest rate by putting
The
that.
rate is not, yeah, recasting it's purely just recalculating payment based on current terms.
Okay, got it.
Okay.
Yes,
Okay.
so, and that's when, that, token comes into play, right? I tell them, if you put 10% down, this is your rate. If you put 20% down, this is a different rate. So, and then they're gonna decide, okay, well, then we'll have to refinance and we don't wanna do that. Then we'll just gonna try to get this new property being contingent on a sale. But
Yeah.
in a lot of cases, honestly, the rate is exactly the same. If you put 10 or 20% down, it's when you start going like really, really low, 50% down or so, then you might see some improvement. But then, they'll see, does it even make any difference? Okay, the rate is an eighth better, 0.125% better. Does it, it worth the trouble of us trying to get under contract, being contingent, and maybe it's not as easy, right? And maybe there is this home of their dreams and they don't want to lose it, and they're gonna lose it because of that 0.125% difference.
Yeah.
So you just see what makes more sense financially
Yeah.
for
For them, because some people have a huge amount of money they're setting on with lower monthly income, and some people don't have the money that they're setting on, and maybe they're expecting a huge like salary bump or whatever. It's like that comes to really talking to you, the loan officer, for you to plug all the different things and make sure that it like you're giving them the absolute best case scenario for them.
Yep.
And their property. So
exactly.
so
I'll give them few scenarios and then they'll decide, make that educated decision, right?
Yeah.
On
That's
which
right,
one
right.
is
Yeah.
better for them.
That's right. That's right. And it always comes down to what works for them. I mean, those scenarios can be so different, and it can be the exact same scenario for two different people, but their goals are different, or their
Yeah.
risk tolerance, or their
Or their
motivation.
timelines, their time
Yeah.
in life. I mean, everything,
Yeah.
we've been in different places and in our lives in so many different
Yeah.
areas. So,
Absolutely.
yeah.
Okay. All right. Thank you. That was a great explanation.
Yeah.
Appreciate it.
You're welcome.
Anybody has any questions, how do they get in touch with you?
They can call me at 571-245-3000.
Did you have to fight not saying it?
Yeah, because I keep seeing like a jingle, 571-3000.
Maybe you need to come up with little tune and I'll sing a thing.
Yeah, I
There you
love
go.
that.
You gotta sing it every time. All right. Okay. Well, we'll see you on next week's video.
Yes, we'll see you soon. Bye.